Good morning, traders. How are we doing today? Hopefully everybody's doing well. There are a few of you here this morning. Happy Wednesday morning to you all. My name is Jason Krutzky. It is a great pleasure to be here with you today to talk all things TrendSpider. For anybody who is here for the first time, just tuning in, never been here before, this is TrendSpider Office Hours. And so what we do here is we talk about different things that are available on TrendSpider. If you have questions about the platform, you're welcome to ask those questions here. Happy to talk about whatever tools you want to talk about. We can look at whatever charts you want to look at. The world is really your oyster with this show. I'm here for you. And you know, one thing that I try to do is try and, listen to what you guys are kind of curious about and learn from those things. And on Monday, we were chatting and the idea of R came up. And I thought, I spent a little time talking about how I think about R. But the general consensus was that maybe the viewers did not know really what R was or what the idea what I was talking about. So I thought that it would be a decent thing to spend, maybe 10, 15, 20 minutes this morning and kind of break down how I think about R and, maybe give you guys some ideas about how you can think about it yourselves. Perhaps that's something that you would be interested in. I don't know. Hopefully so, because we're going to do it. If you're here, say hello. I don't know who's here right now, but there's a few of you. So say hello. Let me know your name. Let me know where you're tuning in from. And like I said, I'm going to spend about maybe 10, 15, maybe 20 minutes. I don't know how long it's going to take, but we're going to talk about R for a little bit. And then I will be happy to answer all of your TrendSpider related questions afterwards. So what is R? Well, R is risk, right? And it's more specifically, it's risk to reward. And in order to understand R, we really have to first understand trade sizing, right? And to understand trade sizing, you really got to consider the very first thing you got to consider about your trade sizing is your total account size. So let's start with an example. I'm going to pull up a Google document here. Start with a quick example, and let's say you've got 10K in your account size. So we'll say account size, right? So you got 10 grand in your account, in your trading account, and you're trying to figure out trade sizing. Well, upon entering a new trade, you gotta think about what you're willing to risk per trade. This is how we start to develop our ideas around R. A relatively common practice that I've kind of always heard, and take this with a grain of salt to make it make sense, and all of this make it make sense for you. But a general idea that I've heard is you should never be risking more than 1% of your total account size, right? So we'll say 1% risk per trade of total account. All right, so you got a 10 grand account. You're risking at most 1% of that account per trade that you take. What's 1% of 10,000? Well, that's $100 of risk per trade, right? All right, so $100. That's how much we're willing to lose on any given trade. So if we have a $10,000 account and we are willing to lose $100 on every single trade, that means in the absolute worst case scenario, if you lose on every single trade that you take, the max that you're willing to lose, that means you can take 100 trades, with a $10,000 account. Well, where R comes into play is the counter to what you're risking, right? R is essentially like a ratio that if you're going to risk $100, you need to define what you stand to gain for risking that $100, right? And, there are different theories about what is proper, what is correct to do here. Some traders are looking for 2R, so they're risking 2 to 1, right? They're risking $1 to make 2. Other traders are looking 3 to 1. They're risking $1 to make $3. In either of these scenarios, right? In the 2 to 1 scenario, you need to be making $200 per trade. In the 3 to 1 scenario, you need to be making $300. And what this is going to do, in theory, this is going to keep you kind of on the right side of the line, so to speak. If you're risking $100 per trade, but you're making $200 or $300 when you have a winning trade, then you can win. In the 2 to 1 scenario, you can have a 50% win rate, right? Let's say 2 to 1. We're saying $200 win and a 50% win rate. At 3 to 1. You're looking to win $300, and you can have a 33% win rate, right? This is the whole idea around R, is you have to understand what you're risking on every trade. You have to understand what you're seeking to gain on every trade. Now, let's take this kind of the next step, right? The whole idea about this, or the whole idea around R, is about building consistency in your process, right? There's all kinds of talk out there about being consistently profitable. And yes, that's a really nice talking point, and that is something we should all seek to achieve. However, I believe personally, and I think a lot of traders would agree with me, if you cannot be consistent with your process, how on earth can you expect to be consistent in your profits? I don't know if it's possible. I think you have to first start with a consistent process, and that's why kind of what I'm suggesting here is always, when you start your trading, start from a position of R. So let's take it a little bit further. Becoming clinical with your execution, it's going to lead to outcomes that are accepted before they happen. And this is a really key piece. It's going to help you remove the emotion from your trading. And emotions are the thing that really lead us to have irrational expectations and perform irrational actions. So we really got to remove them from it all. And this is kind of the key thing. So to recap, we have a $10,000 account, right? We're risking 1% per trade, 1% of our total account size we're risking per trade. That means we're risking $100 per trades. That means we're getting, at the very least, we're getting 100 tries to get this this concept right. You have 100 trades that you can take. Think of it like bullets in a gun. You have 100 shots that you can take. And this is kind of like a bullet methodology. And you can kind of think of it in this way. All right, so what is R? Like I said, it's shorthand for risk versus reward. So what is R? It's risk v reward. Yeah. And let's kind of take this like with a really, or let's put this into a really simple idea. Let's say we're trading, a stock A, right? And stock A is $100 per share. Yeah. At $100 per share, you can kind of slice and dice your account however you want. You could choose to utilize all 10K of your account and buy 100 shares. So 10K gets you 100 shares, right? And remembering our R, let's say I'm going to stick with this 3 to 1 R. Personally, I think 3 to 1 is kind of the way to go. A minimum of 3 to 1 R. So let's say we're looking for a 3R trade on these 100 shares of this $100 stock. Well, in order for this to kind of work out or to utilize R on our trade, if we're buying stock A at $100 a share, we're buying 100 shares, we need to set our stop loss at $99. And we need to set our take profit at $103, right? In order for this trade to make sense from an R standpoint. Now that is if we utilize all $10,000 of our full account. Yeah. Let's say we use $5,000 of our account and we buy 50 shares. Yeah. We can, again, like I said, we could slice and dice this however we want. Well, if we're only using $5,000 of our account, we only have 50 shares. Well, then we can have a bit different of a shape to our R profile. So your stop loss could be at 98, and your take profit would be at 106, right? Because you're still looking for that 3-to-1 R. You're just utilizing less capital. So 50 shares. $2 stop with a $6 profit target. And, you could split this again. You could split it however you want. 10K, or rather, you're using 1K, you get 10 shares. Then your stop loss is at $90, right? And your take profit is at 130. So these 3 trades here are 3 totally different types of trades. No, we are. You've got $100 stock. What are the odds that the $100 stock trades between, $1 and $3 range in a day? Well, that's probably pretty good. It very easily could trade within that range in a day. But what's the odds that it trades in a 30-point range or a 10-point, a 10-point stop, a 30-point target? What are the odds of that happening in a day? It depends. I would say in many cases, they're not very good, especially that $30 move. Maybe on an earnings or an unexpected news announcement or whatever. So, you may look at these 3 trade ideas in 3 different ways. This may be a day trade. Oops. Hopefully this is making sense. This may be a day trade. This may be, somewhere in the middle. This may be like a couple of days. I don't know. It may be a day trade too. This could potentially be a day or swing, right? And then this one kind of feels a little bit more like a swing trade. Just because, we got to think about daily range, and you could get into the weeds on that whole conversation. But the point is that all 3 of these ideas require a different approach. And, it's up to you really to decide how you want to slice and dice your account to make these things work for you. But if you start with R as the backbone of the trade that you take, then you're already kind of putting yourself at an advantage, right? Let's take this, let's move this over. We just kind of talked through like a stock buying common stock scenario. Let's take another move here. I know there are lots of traders out there that are in the process of trying to get profitable via a funded trader account. And in many of those cases, you guys are trading futures. So I wanted to kind of go through a futures example. And I'm going to use ES Micros as my kind of point of reference here. And why ES Micros? Well, simply because, they are smaller size, and so they move the same speed as your minis, but, it's just most of us don't have tens of thousands of dollars in a trading account to tool around with. So ES Micros feels a little bit more like, what makes sense for more people. All right, so ES Micros, they move $5 a point, right? So if ES futures go from 47.80 to 47.81 and I'm long, well, then I make $5 per contract, right? And if it goes 47.80 to 47.79, I lose $5 per contract. How does that affect sizing? Well, let's go back to the idea of our 10K account size. $5 per point. And remember, not just our 10K account size, but $100 of risk per trade. If I need to, I can zoom out here so you guys can see this a little bit better. So $100 of risk per trade, $5 per point means that we can risk up to $20, or rather up to 20 points using our $100 of risk, right? $5 a point, 20 points, $100 of risk. So this is essentially if we're trading with one contract. Well, if we're trading with 2 contracts, it's $10 per point. That's 10 points to get our, again, $100 of risk. And you could keep on stair-stepping this out. $15 would be 15 points at $100. This is 3 contracts. And, you know, if you want to be a gunslinger, $50 a point is going to be 10 contracts, right? And 2 points of risk. Oops. $100 is going to be, 1 point. It's 20 contracts. So hopefully this makes sense. You're risking $5. You're using, or rather, if you're using one trap contract, you're risking $5 per point. You can risk up to 20 points. Well, in this scenario, for the 20 points risk, you need to get 60 points. For the 10 points risk, you need to get 30 points. For the 15 points risk, oops. Sorry, this isn't right. I'm sorry. This is 6.5. My bad. So for the 6.5 points risk, you need 19.5 points. For the 2 points risk, you need 6. And for the 1 point, you need 3. So 60 points win, or you need a 60-point move in your favor to counter your 20 points of risk. You need a 30-point move in your favor to counter your 10 points of risk. You need a 19.5 point move to counter your 6.5 points risk. You need a 6-point move to counter your 2 points risk. And you need a 3-point move to counter your 1 point of risk. So in all of these examples, we are actually in all these examples up to this point, we are considering risking our full $100 per trade. You don't have to do that, do you? You can choose to risk in an asymmetrical kind of way. You know, maybe you want to utilize, let's say, 3 contracts. That means you're risking $15 per point. But maybe you want your stop at 3 points, right? So then you're risking ultimately $45. And you need to get 9 points to counterbalance that. You know, do whatever makes sense for you. There isn't necessarily a right or wrong way, but again, this backbone of R is how you should be thinking about your trades. And doing all of this opens up the possibility, you know, doing it this way opens up the possibility of taking more trades. We talked at the beginning of this idea only allowing us 100 trades. That's if we were to lose every trade. Obviously, that's probably not going to happen, but, you know, this would allow you to maybe take 200 trades if you cut that size that you're willing to risk in half, or whatever you decide. The next thing that we need to do is we need to think in terms of trade quality. The quality of the trade should dictate the size that we take. We all have our favorite setups. I personally know I have mine. I'm sure that you have yours. And then we also have setups that we kind of like, that we kind of know that work for us sometimes, but we don't feel like we have a great success rate with them. And then we also have trades that we take simply because we're scared not to take them, right? FOMO. Maybe our favorite influencer is pounding the table about something, or, you know, we just jump into a trade willy-nilly because, who knows, because emotions. If you don't have these quality of trades identified, then I'm going to stop right here and encourage you, take some time today or soon and understand, make notes about what your favorite trades are, where you find to, what trades provide you with the best success rate. Try and categorize different styles of trades based off of a very basic score. And you can keep it really simple. The way that I look at it is just a very simple rating system using A, B, and C. So 3 types of trades. My A setups are going to be the ones that I take every single time I see them on assets that I am comfortable trading. I know how the setups should work. I'm good at trading them. I'm good at taking stops when I'm wrong, and I'm good at letting those trade ideas work as well. Letting my winners run, as they say. A B setup is one that you know, but it's simply just not quite as strong as the A setup. Maybe overall market conditions aren't just right, or maybe the pattern isn't as clear as usual, but it's still kind of there and you still kind of want to take it. Finally, a C setup. Again, this is going to be a last minute FOMO kind of, I'm just getting in because it seems like everybody else is doing it and I don't want to miss out on this. And I did no research. I did no, I didn't even look at the chart before I got into it. I'm just going for it. So once you've identified the quality of the trade that you are taking, you can determine the size that you want to take. So the way that I think about it is an A setup is going to be full risk. So that $100. A B setup is going to be maybe like 2/3 risk or about $60 risk. And then a C setup is going to be 1/3 risk or about $30 of risk. And again, this is just using our $100 per trade model. Decide a number that makes sense for you and then break it down in this kind of way. That's going to keep you much more honest and much more on the safe side of things. The idea behind the rating system, again, rating your trades, measuring for R is really, ultimately, it's all about accepting the outcome before it happens, right? Like, if you accept what a trade is going to yield you, whether it be a loss or a profit, you're already putting yourself at a huge advantage. You are way less likely to feel the emotional pull of that trade. It should help you stay in your winners longer. It should help you cut your losers quite quickly. And in this style, or approaching your trading from this starting point, since you're building the entire trade in one fell swoop, you're not entering blindly. You're not scrambling to know when and where to exit, whether it's in profit or not in profit. It means that you're not being reactionary, right? You're being calculated, you're being clinical, you're essentially turning yourself into a trading bot, which, by the way, TrendSpider offers. So if you feel like you can't do this on your own, perhaps you might want to explore the trading bots and the strategy tester and learn about kind of how those tools can help you with your execution. And very quickly, I just want to kind of showcase this whole concept on the chart really quickly. Over here on the left-hand side on your drawing tools, you've got this draw position tool. And this is really kind of the meat of the whole thing. This is how I personally utilize the tool. This is how I enact my ideas around R. So let's just say, for example, you wanted to be long on this test of this moving average, and you wanted to get out of this trade. You decided, well, if it goes below this low right here, I want to get out of this trade. So I'm going to put a line there, and I'm going to put my stop level at that line. So now I can see my R calculator right here, and currently as it is, it's at 0.4. Well, let's say I think that I want to get out if we make a new high. Well, what we find out when we take this trade, or when we utilize the draw position tool, is that this trade has a 1.29 R value. That means that I'm risking $1 essentially to make 29 cents. Now, that's not a very high R ratio. If that is an R ratio that makes sense for you and it works for you, by all means, go for it. Give it a try. But think through the amount that you're risking in order to achieve that additional 0.29 cents. The R is simply, if you're abiding by the rule of 3 to 1 R, that's not gonna do it for you. So let's pull this thing up. We'll measure it up to 3. And so we can see the 3R on this trade is up to 477. Now we're trading 477.40. Do we think we can get to 477? Well, sure, it's absolutely possible. We've traded there in the not so distant past. There's quite a bit of price action up around there. Ooh, let me go back to the 5-minute. Oh, what was I just on? Was I on the 1 minute? No, I was on the 5. There it is. All right, so I'm gonna throw a line right here. And I'm going to zoom out just so that we can kind of see where we are. So that would take us back into the highs. The whole point that I'm trying to make here is that you measure out the R and you decide, once you have this idea in mind, presumably you hadn't taken this trade already, or presumably you had figured this out before you took this trade. This is how you determine what type of trade you want to take. Do you think SPY is going to get to 477 today? Well, if you think it's going to get there today, perhaps you're taking 0 DTEs with the 477 calls. If you don't think it's going to get there today, if you think it's going to take another week, perhaps you're looking a week out. Maybe you're taking shares. Whatever it is, again, the whole point of this conversation is to put yourself at the advantage of knowing what you need out of a trade to make it make sense for you on a return and on a percentage basis. So that's the idea. Hopefully I didn't butcher it too much. I spent 20 minutes talking about it. And, you know, it'll live forever on the internet. And you can access this at any time. There are only a few of you here. And hopefully that was helpful for you guys. Nobody said hello during it, which makes me sad. But yeah, that is my explanation of R. That's how I think about it. Hopefully that helps you. If you have any questions, feel free to ask them. If you're just here to kind of learn about TrendSpider, please direct me. What would you like to learn about? What would you like to know more about? I am here to answer those questions. And if you don't have any questions, you know, that's cool too. Like, I don't have to answer any questions today necessarily, but I would love to, you know, there's a few of you here. And I don't have anything in particular that I'm looking at that I want to look at. So I'm going to leave it up to you guys. If you need anything, hit me with what you need to know about. Got a few likes. So there's a few of you here that are liking what we're talking about. Say hello. What have you got to lose? I am talking into a void at this point. While I'm waiting for you guys, I'm just going to be kind of taking a look at things and seeing what's going on out there. We have this watch list that I really like. If you go to your watch list search bar and you type in Wall Street, we've got Wall Street bets. So this is like essentially curated from Reddit. So we're pulling top mentions, top negative mentions, top positive mentions, and by quite a bit of different, or quite a different set of periods of time. So top mentions the past 14 days, past 30 days, past 7 days. And then you have top mentioned yesterday, which is kind of interesting. So here are all your top mentioned yesterday. And in a lot of cases, you're going to get a lot of the usual suspects, the big names that you would kind of expect to see. But every once in a while, there are names on here that kind of break the mold, and you can find some things that are kind of out of the ordinary. Pimp. A Black-Scholes calculator. What is that? I don't even know what that is. Let me look it up. Important tool for options traders to set a rational price for stock options. That's interesting. So what I would assume on a Black-Scholes calculator, you would theoretically, would you need all of the options information for that, Pimp Pop? Gotcha. Shows you how much I know about options. I imagine you would need all of the underlying options data in order to do that, right? Because wouldn't that be taking into account all the Greeks? Yeah, so Pimp Pop, James is a member. He's the leader of our customer success team. So you're talking directly to a guy that you need to be talking to here. Yeah, so again, like I say, I'm not completely certain, but presumably you would need all of the options information there, which of course we don't have. We do have unusual options, as you know, or as you probably know, but we do not have all options, like the entire flow. At least at this time we don't. And I imagine you would need all of it to be able to do that. And perhaps if we ever add that, then perhaps we would additionally add a calculator to go along with it. But James might actually be a better resource here on that. Right, and that makes sense. Would it, I wonder if you had the options chart, like if this was, you know, city 62 or, you know, whatever, 55 April expiry option, would it work the same way as this? Would you be able to utilize the R tool in that way? I guess not, because you still have you still have Greeks, so you still have those adjustments. So I guess that's what that Shoals calculator does. Yeah, Pimp, I'm sorry that I can't be more helpful in this way. I do not know if or when we might bring like all options data into the platform. Ah. Excuse me. James, do you know if that's something that is in the plan? I've not heard anything about it personally. And is there anything else that you guys are curious about? Is there any other questions that anybody has about anything? If not, maybe we'll wrap this thing up and be a little short today. I hate to just be here and not helping anybody with anything. Yeah. But James, is it possible, would you be able to utilize that without the data? I guess is the question. I kind of don't think so. Couple more folks here. Are there future plans to add Gex? Game exposure. What's up, Mohit? Definitely looking into it. This is something that quite a few people have been requesting lately, like gamma levels. A handful of friends of mine on the FinTwits have strongly requested that we add those gamma levels. So the product team actually is looking into that data and looking. I can't give you a time frame on when it might come, but definitely looking into it. There you go, Pimp Hop. So is this Bitcoin ETF going to get okay today? Word on the street is that's the plan? What do you guys think about the Gary Gensler tweet that got deleted yesterday? Was he really hacked? Do you really think he was hacked? Kind of have my doubts. But it was interesting to see how ETH had a completely opposite correlation to what happened with Bitcoin. That's funny. Unusual options. Sure. All right, so unusual options can be viewed in a handful of ways. First off, through the options widget here on the right-hand side. So you just add that to your sidebar, and I'm going to open this. Now, again, this is unusual options. This is not all options. Unusual options are categorized as orders greater than $25,000 in premium. So the first way to visualize unusual options is per ticker on the side of your chart like this through the widget. Excuse me, the widget is going to display the unusual options of the ticker that you have up on your chart. So right now, these are all the SPY unusual options. If I were to switch to the QQQ, these are all the QQQ unusual options. On this chart, you're going to see a lot of little circles here. Some of them are going to be bigger. Some of them are going to be smaller. Some of them are going to be green. Some of them are going to be red. Some of them are going to have blue lines around them. The size of the circle is defined by the size of the premium. So the larger the circle, and you can hover over it, and you can kind of see a little breakdown. So this one, $1 million in premium for the 390 calls expiring January 12th, whereas this little guy right here is $75,000 in premium. Believe this is this x-axis? I think the horizontal axis is the x-axis. It's early. Anyway, so this is going to be your time axis. So as time goes out, as we go out in time, this is going to show you kind of like leaps, essentially. So the farthest out unusual options in the last 250 orders that have come through is for January 2025. Oh, no, there's one way out here for January 2026 as well. And of course, green are calls, red are puts. Doesn't necessarily mean that that they were bought or sold. It's just the type of order and the size of the order. You can filter by expiration date. You can filter by premium. So that's of course the size, and then you can filter by strike price. So if you have, you want to, I don't know, Qs are trading at, what are Qs trading at right now? Qs are trading at 406. So maybe you want to filter out everything below 406. You're only looking for like in the money and above. This is that. If you wanted to look for everything, everything to the downside of that or anything below 406, then this is what you get. You can also, though, you can see them in a different way. So if you go up to your assistant right here and you say, I'll just say QQQ options. and I'm gonna say see all unusual options for QQQ. So this is another way of viewing viewing all those unusual options. This is going to give you a few more pieces of information, specifically the open interest. It's going to give you the percentage of open interest here. What are you looking for? You're looking for price and implied volatility. So implied volatility is not a value that we offer. Whether or not that will come in the future, I'm not sure. But so by searching the assistant for all the unusual options, we can filter them in kind of some unique ways. So each column here has, if you hover over the title of each column, you've got this three vertical dots. Click on that and go to filter and say add filter. And you can filter by all of these items. And, you know, do what makes sense for you. I always like to filter by the tags. And I'll choose contains all of, and I'll say sweeps at the ask. And the reason why I'm specifically looking for sweeps at the ask is because this is, you know, conviction buying in one direction or another. So we filter by sweeps at the ask. You could filter by open interest is, I don't know, greater than $1 million. Oops, no, sorry, I did this wrong. Premium. So premium greater than, I don't know, maybe we'll say something smaller, $250,000. What is this music? I'm going to skip this song. So this gets us, you know, just a bit more filtered of a breakdown. And the other piece of this is that I can view all unusual options. Like right now I'm filtered by the Qs, right? If I want to remove this, now I'm filtering by just sweeps above the ask, or sweeps at ask with a premium of over $250,000. And now I'm seeing every single ticker that, that is meeting that criteria, every single order that's meeting that criteria, and it's not ticker specific. It's any ticker. So in conclusion, this What's Happening Now tool allows us to see the aggregated view of all unusual options that are coming in. If you just want to see unfiltered, all unusual options, you can just remove the filters here, say apply, and here are your all unusual options orders as they are coming in, regardless of ticker, regardless of size, regardless of direction, regardless of anything. It's just all unusual options. And it doesn't matter what ticker I'm on, that list is going to stay true to what it is. So yeah, so if you want to just see the unusual options of an individual ticker, you can see them visually using the unusual options sidebar widget, or you can utilize What's Happening Now. Yeah, so what James is talking about, let me show you guys really quick. I think I have it. Maybe I don't have it. No, I thought I had it. Let me go to custom indicator. Here we go, volume at strike. So this is unusual options volume at strike. This is the indicator that James is talking about here. Oops. So this gives us a visual representation of all the unusual options orders on a particular ticker at a given time. Now these levels do change, right? So do keep that in mind. These levels are going to change throughout the day, over time, but you know, you can kind of see where like big call walls and put walls and these sorts of things are. So you got a big area of calls here at like 475 that we're pushing through. It's been acting as resistance. So you could have called this like a call wall. Found nice support this morning around that call wall around 474. You can see if there's anything further up. Looks like the next big one's at 480. But yeah, so this custom indicator and all custom indicators, you know, you can access what we've got. There is, let me show you. Just grabbing something real quick. Grabbing a link. Here we go. Took a moment to find it. Sorry about that. If you're interested in seeing some of the custom indicators that we have built, it's going to be found under examples. Actually, let me give you this instead. You can pull the code from this page. There's a bunch of basic ideas here. We're going to be opening up the TrendSpider Marketplace here in the not so distant future, which is going to be a repository for all custom indicators. Some of them will be free, some of them will be shared, some of them will be paid custom indicators. But we got a bunch of random ones that are pre-built, and you just need to add them to your chart. Like, for example, this unusual options levels. You could just highlight this. And paste it in and say apply. And there's your levels. No, my music stopped. We're going to get that going again. So hopefully that explains things for you. Pimp, hop, sir. Any other questions from anybody? Anything I can help with? Yeah, Mohit, it's gonna be quite cool, especially once folks start adding more and more things. We've got a go-no-go indicator suite that's coming along with that. That's pretty cool. We'll be talking more about that here in the weeks to come. Yeah, Mohit, feel free to add it to your account, man. Like I said, all you got to do is copy this code. And then once you copy it and paste it in, just make sure you say apply. So it's going to add it to your charts there. And then say save. And then it'll appear as an option over here. See UO volume at strike. But then when you turn off your custom indicator editor, it will remove itself from your screen. You won't see it anymore. So you'll have to add it via the indicators button. So click on the three dots next to indicators, type in UO. Here's UO volume at strike, and say apply. And then it'll be on your chart. And you can do like you're used to doing with all of your indicators, toggling it on and off and all that sort of stuff. So what's up, y'all? Any other questions? Are we good? Do we feel good today? You guys are pretty quiet today. Nothing wrong with being quiet. Being quiet's good. I hope I didn't bore you too much with my explanation of R. Hopefully that's helpful to somebody. Going once, going twice. Anything else I can help with? Anybody need anything? Do we want to look at any charts? Do some analysis? No, we're good. We got more people here than we've had all day. Nobody has any questions, though? If not, I'm going to get out of here. James, what you got, brother? Qs and semis. What do you want to look at them? Give me 1 sec. Your request absolutely counts. What time frame, James? So James, you know, this is just me personally. Type of guy I am. This is what I see. If anybody's ever watched the market structure videos or the price action, just like the price action stuff, if you're an ICT trader, to me, what I see, at least here on the 4 hour, I see a very clear break structure here. All right, made a new low. So what to me this sets up is a failure right around in here somewhere. You do have this gap, and they could they could fill that gap and come back in a little bit and hold. I think the faster that they get to 410.47, the better for my idea. And let's go back to our conversation on R, because I think the conversation on R is important here. Why do I like this trade? Why do I like this idea? Oh, shoot. I like this idea simply because you know that you're wrong very quickly. If they make a new high, you're wrong. But if they fail, then what this sets up is a new low below this guy. And if your target is a new low, that's a 7R trade. That's why I like it. Now, will this happen? Psh, who knows? I'm not saying it's going to happen. I'm just saying that in the style that I personally trade, this is how I would set this up. Seems to me like we still have higher highs going, so trend is intact. Mainly thinking about rejection in this gap or just above, and then retesting some of those prior highs. I mean, for sure, I'm looking at a 4-hour chart, right? It's just one chart. If we go to a weekly chart, then 100%. Let me remove all this stuff. 100% higher highs, very strongly intact. You've got a pretty clear fair value gap right here that they didn't quite fill. Doesn't mean that they have to fill it. There are no rules around it, but you have lots of them, right? You've got one right here that hasn't been filled. You've got one right here that hasn't been filled. You've got one right here that hasn't been filled. You got quite a few of them. So this is like, for ICT traders, is like a shotgun, or is that what it is? I believe that's what Sarah calls it. I can't remember. You've pretty much only made higher highs and higher lows. They did take out the lows here. So this was like your re-entry spot, but if we go to the daily, the reason why I kind of think this has validity is because you see it on so many time frames. Whenever I'm looking for patterns, I'm always looking for them on multiple time frames. I don't want to trade a pattern that I can only see in one spot. I want to kind of see it on a handful of different a handful of different time frames. And so you see it here on the daily. It's pretty clear. I like that I see it on the daily because it just gives me a little bit more confidence in it. If I go down to an hourly, it becomes very, very clear to me. It's just like blaring. But, you know, again, it's one style of trade, and it just depends on your time frame and all that sort of stuff. Do you have a way to scan for stocks that just crossed the 20 SMA on the hourly? G-Sal, 100% chance, dude. Yes. So, in your market scanner, a couple different ways that you could script this if you wanted to. The way that maybe is the simplest, if you go to, so you say hourly, simple moving average, price broke through it. We're going to change the length to the 20. So hourly, 20 SMA, price broke through it, buffer area with 0. Buffer area is just like the area around the moving average. So if you specifically want price breaking through the moving average, you want to have that buffer area width of 0. You don't want to make this any value. The only other thing you might want to do, price broke through it, it does not define the direction that price broke through. So you might also want to say then that price close, hourly price close, greater than indicator hourly SMA 20. So this is how I would define it. However, you could also say, you could remove this. There's always multiple ways. There's almost always multiple ways to do things, to script things. So we could say price close less than indicator hourly SMA 20. So in the first condition, we've got price close greater than SMA. And then in the second condition, we say price close less than SMA. And what we want to do is we want to define the close less than the SMA as happening one candle ago. And then you want to define the price closing greater than the SMA as happening on the current candle. And so we can turn current candle toggle on. I could run this scan. Let's see if anything's coming up in the Dow 30. It's a pretty small list, so we may not get anything. We'll see. So triple M. But let's do this. Let's take this like, excuse me, multiple steps farther here. I would like to expand on this idea because now you've got my brain going. I'm thinking about things here. Hold on. I want to remove a bunch of stuff so that we're only looking at the one thing. All right. So how is this helpful to you? To me, this ain't helpful because price is like sideways, you know? And G-Sal, you can tell me if this is helpful to you. But this doesn't really seem like what you're looking for. And the reason why I say that is because it's been consolidating around this 20 SMA for hours, for days, really, since January 3rd. It's kind of been stuck here. So is this really what you want? And I would suspect it's not. So the next piece of this is I would do something like, I would go to add parameter. I'd say condition group. And in this condition group, I would say price closed on the hourly less than this SMA. By at least, and let's say maybe like 2.5%. And I'm going to say happened within, and I'm going to say maybe, I don't know, the last 20 candles. And this is going to be kind of loose. I get that's going to be kind of loose, and we can adjust it further. But I'm going to rerun this scan. And the whole purpose of this is because I want to see a I want to see a little bit more like of a conviction kind of scenario. Even still, we're not there. This isn't really what we're after. Let me go to a bigger list. Down, uptrend for some time, then down for a few days, is now going up to the SMA, which is a trigger to go long. Yeah, so pimp, hopefully some of this will help you. So like this. G-Sal, is this kind of where your head's at? Now, this is kind of by luck. Okay, so and or confuses you. That's important. That's good to know. We can dig in on that a little bit. But first I want to know, G-Sal, is this what you're after? Let's see if we find anything else. And in some case, this is what I was thinking you might be looking for, like a move where you're finally regaining like this. But it sounds like you're looking for more something like this, where you were in an uptrend and you said what? In an uptrend, down for a few days and now going back up. Are you looking to regain the 20 SMA? Are you looking, so you're looking to have lost it and regain it? Were you trading above it previously like this? Because again, this is all stuff that we can define. The more specific you can be with your ideas, the better. I will always say that. But even better would be if we could have an uptrend for many days. All right, let's take a look at Amazon and see what Amazon's doing here. So on the hourly, you were trading well below it, and then you pushed above it. All right, let's look at side by side. All right. Yeah, so that's kind of what this looks like. You're trading above it nicely. They broke down below it and regained it. I mean, this looks, on a small time frame, this looks exactly like Amazon. No? On the daily? This looks a ton like this. Yeah, okay. So, a couple things you can do. Inside of this first set of conditions. Now, you want a bunch of stuff to be true. And then you also want to give, like, you want a bunch of stuff to be absolutely true. And what you want to be absolutely true is that price is breaking above that SMA. Then you want to define some other stuff. You want to say that, well, it's been cool. It's been trading below it at some point for a period of time. So that's kind of what this does. But you have to define it differently than you're defining this stuff, because we're saying happened within, right? We're saying happened within the past 20 candles, price closed less than this 20 SMA by at least 2.5%. And maybe this is too much. Maybe you want it to be 1% or 1.5%, whatever. And maybe you want it to have happened within the past 8 candles. I don't know. But we're defining this condition differently than we're defining these conditions. And therefore, we have to put this condition in its own condition group. So every time you add a parameter, you can choose condition group or condition. Now, if I add a condition group here, see how it's going to build the condition group within the condition group? So I have this small condition group within this big condition group. What that means is that the definition of the main condition group that I'm in, this one right here, is going to impact this. So let's say I made this any of the following. And I added a thing in here that said, I don't know, none of the following is true. And price closed greater than the indicator, greater than the SMA by at least 1% within the last 8 candles. So now we're saying that either price closed less than the 20 SMA within the past 8 candles, or it didn't close above it by at least 1%, right? Like, you have to be mindful of where you're putting these condition groups. So, and we can dig into that a little bit more if you want to, but to specifically look for that uptrend, you got to define it. So let's define it. We can say indicator hourly, simple moving average greater than indicator hourly. Oops, that's the 12-minute. That's not what I wanted. Well, I'll just grab this. So now I'm saying the 20 SMA is greater than the 20 SMA X candles ago, so maybe 10 candles ago. What does that mean? Well, that kind of suggests an uptrend, right? If your 20 SMA right now is greater than it was 10 candles ago, that's an uptrend. Could it have deviated during that time? For sure. Could it have dipped during that time? For sure. Do you want to specify that it didn't? You can. You just have to add more conditions. You have to define more about it. So I can, actually, I'll just duplicate this. I'm going to duplicate it a couple of times. Ah, dang it. I just deleted it. Gosh, it's early. All right, I'm just recreating this really quick. Greater than indicator hourly SMA. So if I want to, I can duplicate this. And I can say currently it's greater than it was 2 candles ago. 2 candles ago, it's greater than it was 4 candles ago. 4 candles ago, it's greater than it was 6 candles ago. 6 candles ago, it's greater than it was 8 candles ago. Right? So pretty consistent, steady uptrend. Yeah? So now you're saying price has broken above the 20 SMA. It was trading below it, but the 20 SMA remained in an uptrend over the course of this period of candles. So we rerun the scan. Let's just see what we get really quick. We're absolutely going to get AEVA because it stayed in an uptrend. LMND, same idea. Strong uptrend, broke below, regained. Awesome. Well, I'm glad that that we can kind of make this clearer for you. Now, again, you could get even more specific with it if you wanted to. It's just all about the specifics. It's all about what you need to define. And there are no rules around that. It's just what can you define about your strategy. The more that you can define, like for example, on this one, how far did it get away? Like in this particular case, it got 8.8% away above its 20 SMA. Well, you could also, if you wanted to, you could also define, let's add another condition group here. You could say price high is greater than indicator SMA by at least 7% within the last 8 candles, and you could say it wasn't. So essentially, like it's less. Actually, I guess we should say all the following on this particular, because I said less than. So price close less than, greater than. By at least 7%. And you could say none of it happened. Like it never closed greater than 7% above the SMA over the past X candles. Like you can define how far price got extended from that SMA if you want to. Whether or not that's necessary, I don't know. If this kind of does it for you, what I can do is I can save this for you and I can share it with you. Let's see. Just going to flip through some of these. Another thing that I would recommend, honestly, so here's another kind of like what you're after. Align looks like what you're looking for. The other thing that I would add in here, and I tend to add these conditions constantly. I add a price condition. So I'm going to say price close. Let's use daily on this. Greater than a constant value of X, and, you know, make X be whatever makes sense for you. Yeah, I'll share it with you, G-Sal. And then the other thing that I would do is I would say daily volume, and specifically the moving average, this guy, volume MA, is greater than a constant value, and let's say like 500,000. So you're just saying daily average volume is greater than 500,000, and the price of the stock is greater than $10. And that's going to remove just some of the low volume names from the list. It's going to give you more actionable stuff. Now, will all of these look like what you're specifically looking for? Probably not, but they will whittle down the list for you and help you find, you know, it makes the list a lot smaller. And a lot of these do look pretty close to what you've kind of described. Daily average volume over 1 million. Yeah, okay, that's fine. There you go. So Affirm, CFLT, INMD, ALGN, Lyft, Okta, X-Ray. Yeah, cool. And again, like I say, you may want to define some of this stuff. Like you may want to say, like we've defined that the SMA is basically in an uptrend, but you may also want to define simply something like hourly SMA is greater than hourly SMA by at least, let's say like 2%. So we'll say currently the SMA is greater than it was 8 candles ago or 10 candles ago or whatever it is by at least 2%. So we've defined that it's basically in an uptrend, and we're also defining the minimum amount that the SMA is currently greater than it was 10 candles ago. So hopefully that will add an additional level of uptrend to that SMA. 2% may be too much. I don't know. Looks like we're not really getting results here. So aligns meaning the criteria. This was kind of like the best looking one, right? INMD, this was a good looking one. So maybe that is what you're after. Maybe you would want to define this. Maybe we can make it like 1.5%. I don't know. Anywho, you've seen how I built it. You can always go back and rewatch this. I'm going to save this for you, and I'll send it over briefly. Yeah, here we go. Now we're filtering. Yeah, so this list seems like it's doing what we're really looking for. So we're gonna call this GSAL's 20 SMA regain. Yeah, is that a good name for it? Do you want to call this anything in particular, or does that work? So Mohit, you said, what's so special about the 20 SMA? That is a question for GSAL. I don't know that there's anything special about any moving average or any indicator at all. I'm going to go back to my point at the beginning of this show. Okay, cool. So that's what we're going to call it. GSAL's 20 SMA regain. We're going to say save. We're going to say share. And we're going to share this thing. The point that I was trying to make at the very beginning of this show for the first 25 minutes was that it doesn't matter why you're taking the trade. Take the trade off of any moving average, any indicator, whatever. Just make sure that the risk makes sense for it. That's it. That's all you got to do. That's like such the key here. Not every trade's going to work, but some of your trades will. And as long as your risk to reward makes sense, that's all that matters. Here you go. There you go, GSAL. My New Year's gift to you. And hopefully all of this makes sense, why I did this. Actually, let me look at this real quick. So actually, I think we could just remove this condition. Yeah, I think we can remove that. Just want to make sure I get the same exact names. Yeah, GSAL, no problem at all. That's what I'm here to do, man. Yeah, okay. So I'm going to save this. Cool. All right, you're good to go, man. Glad I could be of service to you. And the last thing I would tell you to do is once you've loaded this into your platform, let me just show you guys really quickly for those of you who are tuned in. One of the great things about TrendSpider is that we can share these sorts of things with each other. We can create scans and strategies and share them. If anybody ends up downloading this, you're going to see this screen. Go to login and import. Click on that. And then you'll be able to add it to your account. And GSAL, what I would do if I were you is I would create my own copy. Save it as your own so that if for some reason a year from now I'm cleaning out my scans and I delete your scan idea, you don't lose it as well. And also that will allow you to adjust it. You know, you may determine that you'd like to play around with some of these values, maybe make the SMA uptrending for a little bit longer period of time, or maybe you want to, you know, only see stocks above $5 or whatever. Maybe you want to make changes to this, and the only way to make changes to it is if you save your own copy. So make sure you do that. Snap, nice and clean. LMND, nice and clean. GSAL, I think we like nailed this for you, man. Cool, sounds good. All right, y'all. Well, I'm past an hour here. This is the last call for questions. If you have any questions, hit me with them. If you don't, I'm going to jump. Going once, going twice. Going 3 times. No questions? We're good? I'm gonna assume we're good. Okay, we're good. That's it. That's a wrap for today. I hope you guys have it's a great one. If you look at the daily side by side with the hourly, it gives a great hint that pullback is over. And now we are another move up, starting after reclaiming 20 SMA hourly. Right on, Cesar. We did it. Proud of us. Y'all have a great rest of your day. Holler if you need me. You know where to find me. I'm on Twitter at Krutzky Trades. There's a link for you. Tesla technical support. SM. What do you mean? What is Tesla's technical support number? Here you go. Tesla's support number. 1-888-518-3752. I know that's not what you want. Let's look at Tesla really quick, and then I'm going to get out of here. Depends on your time frame, though. What time frame? This anchored VWAP seems really important from the all-time high. This anchored VWAP from the low here seems important. But right now, what are we doing? We are stuck in no man's land on the daily. Let's see, the daily. Well, you definitely want to see these lows hold. I'm going to, again, we're going to go back to this. Let's go to this anchored VWAP here. So a couple of different things that I would look at. I would look at fibs. Measure your fibs from low to high on the daily here. This is always a good practice. Where are you in the fib sequence on the retracement? And right now we're trading just above that 50% retrace. You've got a little teeny weeny unfilled gap right in here. What's RSI looking like? just want to see if there's any divergence. Yeah, so a little bit of divergence. Making higher lows, but RSI making lower lows. So like a hidden divergence. But this is your kind of key area in my personal opinion. This is not financial advice. This area in here. When it comes to fibs, when it comes to pullbacks after a move, right? You don't want the pullback to be so steep that it starts retracing the whole move. And so essentially you want it to like you really kind of want it to see it hold around now. There is a little trend line here. Let's see if Auto Trends sees it. Yeah, this guy. So this is actually, I guess, this is a pretty long-term one. Interesting. I didn't even see it that far back, but it's very clear, isn't it? So this could be actually really important. You've got this trend right here around 229, probably is your key area. I'd be looking for that. Not a hugely good sign that you're trading below this anchored VWAP from these lows. So your average buyer from these lows is now losing on the trade. If we want to, we can add a volume by price. And I'm going to measure it from, where are we here? Oh, here it is. My bad. Yeah, so this isn't the best look. Not going to lie. This isn't the best look. You're trading below the point of control and the VWAP from your October 31st lows. You need to get back up and over that, man. You got a bunch of volume here around 240, 238. You need to get back up and over it. So I would be looking for this thing. If this thing's going to hold, I'd be looking for it to do so in the next couple of sessions. Think about the fact that you've got stops. You've got people who are long, who have stops below these two big lows. So what would not shock me at all, if they want to take this higher, what would not shock me at all is to see them break below those lows, take the stops, and instantly reverse it. Maybe not like to new highs, but just like a very quick move lower followed by a very quick move higher. If they give you something that looks like that, that should be a good sign. If they're able to hold these lows, even better. If they can hold these lows, reverse it, and regain the VWAP and the point of control from this low, even better. But it wouldn't shock me. You probably have a lot of stops below 228. You probably have a lot of stops below 226 3/4. So if they take stops, see what they do when they take stops. If they can give you a nice, quick, fast reversal, you see a big flush down and followed by an instant like V-shape recovery, that tells you something. If they just fade it and just keep fading it, you're probably going to continue to the bottom of the range, would be my expectation. Because again, your fibs, you're pretty much at the 50% retrace right now. And this is the first time they've really tested that 50% retrace since making the high. So that's kind of where my head would be at. This divergence is interesting. RSI decreasing while price is making a higher low, potentially. I'm not saying it is going to make a higher low. I'm saying it's currently divergence here. But I don't know. The market likes to inflict the max amount of pain, in my experience. And so when I think about max pain, I think that there's probably quite a few stops here. And maybe they come in and flush those stops. And then it's just all about what they do after that. But we'll see. If they can regain that point of control in the VWAP, then maybe what you might look for is a retest of it. And then you have a tradable low, right? You're risking off of a low. If they're able to reverse now and regain and come back and test, you can use the low as your stop, or maybe you can use this low as your stop. I mean, if you wanted to, you could go long now and use one of these lows as your stop with the idea of one of them holding. And then, again, going back to the conversation that we had at the beginning of the show, let's say that we got in right here. And we put our stops just below these other lows. Well, if we're looking for maybe here or a new high, I don't know what you're looking for. Remember, consider R. This is a 4.33 R trade. So if it does reverse and it does go and make a new high, that's a pretty sweet return. That's a great R. You're not risking too much, but doesn't mean that we're done here. Doesn't mean they're done taking this lower. We'll see. I don't know. So SM, hopefully that was helpful. I'm never going to give you a clean, this is what's going to happen, because I simply don't know what's going to happen. But that's how I would be thinking about it. I hope that was good for you. I hope that was helpful. And I'm going to close it up. We're a half hour past my hour schedule. So I'm going to close up shop here. Thank you guys for tuning in. Hopefully the lesson on R at the beginning of the show was helpful. There were only a few of you here. But, you know, you can access it at any time. If you ever have any questions about it, you're welcome to hit me up and ask me. I will be back again on Friday morning. We will do this once again. We will build scans. We will run strategies. We will analyze charts. We'll do whatever it is you guys want to do. I'm happy to just do whatever. So thank you for being here. Thank you for tuning in. If you enjoyed this, please give me a like, and please subscribe to the channel so that you can be notified next time I'm live. We try to do these a couple times a week, usually Monday, Wednesday, Friday, in the morning, sometime around 11 o'clock a.m. Eastern time. That is variable. It depends. But again, if you enjoyed this, if you found this helpful, let the good folks know that you're enjoying it. You know, hit them up in chat and let them know that you enjoyed this. And again, subscribe to the channel. Hit me with a like. I really appreciate it. Those numbers are all really important for me, and they allow me to keep on doing these things. So as long as that line keeps going up and to the right, we're Gucci. All right, y'all. Have a great rest of your day. Holler if you need me. Can't wait to chat again on Friday. And yeah, trade them well.